Good morning and welcome to Stock Market Today. It's Thursday, November 8th, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and Stock Charts TV. And you can sign up to receive a free Power Feed email with daily stock ideas and the ability to follow along with this show. Head over to ChaikinAnalytics.com/today. And before we do dive in today, I just want to highlight, I misspoke yesterday. I said that if bond yields pulled back to retest their rising 200-day and 50-day moving averages, that would be bearish for bond proxies. What I meant to say was that it would be bullish for bond proxies. So thank you to our client, Phil, who tracked me down and let me know. So I just wanted to correct that error today. Usually I'm good about correcting it in real time, but I missed it. So thank you, Phil. So equities in the U.S. staged a strong rally yesterday following the midterm elections. The Dow, the S&P, and the NASDAQ all added over 2% on the day. Treasuries were weaker with some curve flattening, and the dollar was down on the euro and sterling crosses, but stronger against the yen. Gold finished up 20 basis points. Oil was weaker, but ended off the worst levels following a larger than expected inventory build. WTI crude down 90 basis points for its eighth consecutive decline. And as we get to the desk this morning, futures are weaker. They're down 40 basis points, near the worst levels of the morning following that big rally in the U.S. yesterday. Asian markets were mostly higher overnight, with Japan as a standout, but China was lower. European markets are mostly weaker here this morning. Treasuries are weaker as well, with the curve continuing to flatten. Dollar is stronger versus both the yen and the euro. Gold off 20 basis points. WTI crude is up 30 basis points. And as we look at the structure of the market here, you can see here, now I didn't add a ton of resistance levels because I don't want to crowd the chart, but we did reclaim the 200-day moving average. It is still declining. Support comes into play now in the 2760 to 2780 zone. Resistance does come into play at around 2830, which is the declining 50-day moving average. However, first, there is a key retracement level to contend with, and it's right here. We closed at it yesterday. We'll dig into this a little bit deeper, but this high also now coincides with the 62% or 61.8% retracement of this move down from the highs to the lows. So we'll take a look at why that might be important. Will the RSI move from bearish ranges? We're trying to answer that question, but we haven't answered it just yet. However, the Chaikin money flow indicator did turn bullish with the strong move yesterday. We've been highlighting that it's been improving. Yesterday, it did flip to the bullish side, so we'll see if we can maintain that positioning. So in our market in a minute, what we're talking about in our note to clients today, stock stage a post-election rally. We hit on that already. S&P 500 testing a key retracement level. We touched on it. We'll dig in on it a little bit deeper. Market breadth continues to improve in the U.S. As the market rallies here. But global stocks do remain in a downtrend. And as I said, futures point to a lower open. If we look at the power bars for the major indices, we're going to see a lot of improvement. Chaikin power bar ratio for the Dow, 7-4 in favor of the bulls. For the S&P, 90 bullish or very bullish stocks, 76 bearish or very bearish stocks. Strong outperformance on the NASDAQ yesterday, up over 3%. 21 bullish or very bullish stocks, 12 bearish or very bearish stocks. So that's a big flip. We went from 2-1 to the bears to nearly 2-1 in favor of the bulls. Small caps underperformed on the day. They added 177 basis points, but they did underperform, and the power bar ratio is still weak there. 245 bulls, 421 bears. Slight uptick in bonds across the board. Healthcare, big beneficiary of the post-election rally yesterday, up 2.94%. 22 bullish or very bullish stocks, 2 bearish or very bearish stocks. And according to the power bar, small cap stocks are somewhat more bearish than large cap stocks, but the major markets have flipped to bullish. Our stock of the day today, if you're following along in that email, our stock generated for you based on our proprietary Chaikin Power Gauge rating is Hill-Rom Holdings. From the medical products group, Hill-Rom closed at 97.20. Up 169 basis points yesterday, a slight underperformer, actually. Power Gauge rating for Hill-Rom is very bullish due to very strong earnings performance, very strong price volume activity, and attractive financial metrics. And when we roll up the factors, we come out with that very bullish rating. We have a very bullish stock and a strong trend, but a weak industry group that's based on the power bars. It's interesting to me, this strong move higher following earnings has taken us into resistance here in the $96 to $98 level. But let's read the chart from the bottom up as we always do. Here's the ribbon, tells us where the power gauge rating is and has been. We are on that very bullish rating, and we're just beginning to outperform the market. So the market and the model are getting into gear. However, we are nearing overbought levels. Money flow has turned bullish. You've had this strong rally here. Futures are down this morning. Would not be surprised to see Hill-Rom take a little bit of a breather here with the market. We've regained the long-term trend line, which is beginning to curl higher. I like buying this one on a pullback back towards the $94 level. Let's kind of get closer to an oversold condition than overbought. But Hill-Rom is undergoing what we like to call a personality change here as it goes from a big underperformer to a relatively large outperformer. Keep an eye on Hill-Rom. I like it closer to 94 at support around the rising long-term trend line. Our sector tracker, movement in the major S&P 500 sectors over the last 5 days is predominantly bullish, with the groups that had been lagging playing a bit of catch-up. Materials up close to 6.5%. Discretionary up over 5.5%, and healthcare over 5% in the last 5 days. Your defensives, real estate staples, and Utes towards the bottom of the list, but all of the major sectors have been positive over the last 5 days. And that's an encouraging sign if you're a bull, because the rally is broad-based. As I said, we're hitting a key retracement level. Would not be surprised to see us take a little bit of a pause here, but I think we can continue to use pullbacks in the market that respect key support levels to buy our very bullish and bullish stocks when they become oversold. Our industry in focus today, regional bank services, which over the past 6 months has underperformed the S&P 500 by nearly 15%. And that power bar ratio is very weak. And remember, that's a measure of future potential. Group is currently ranked number 14 of 21 subsectors that we look at, and it moved down 1 slot over the past week. Some of the indicative, very bearish names there: Heritage Financial, HFWA, First Republic Bank, FRC, and Bank of Hawaii, BOH. BOH a couple of weeks ago was a bearish idea in our note. But let's look at Heritage Financial here today, because it kind of sets up the way we look for bearish ideas. Heritage Financial is a very bearish stock in a weak trend and a weak industry group. So as I like to say, we're fishing in the right pond if we're looking for a bearish idea. Ribbon at the bottom of the screen, we can see we've gone from neutral to bearish, and the market and the model are in agreement. The dynamic duo is in gear as Heritage Financial has been underperforming the S&P 500 or the SPY since late September. Stock is currently very overbought, but money flow remains bearish. Below a falling long-term trend line, it has rallied here from 30 to 33, but it did trigger one of our proprietary signals. This one, a relative strength breakdown signal today. So investors who are looking for bearish ideas want to maybe take advantage of overbought conditions in very bearish names, might want to look at a stock like Heritage Financial here, especially as it triggered one of our signals here today. Looking at what's trending, yesterday's S&P 500 gainers and losers, XEC up over 12% on earnings. DVA up nearly 10%, as there was an item on the ballot in California that could have impacted revenue for dialysis companies. That item was not passed. It was not voted for. So the dialysis companies saw a bit of a relief rally yesterday, DaVita included. Centene, CNC, and WellCare Group, both beneficiaries of post-election results that point to favorable healthcare environment. And PXD was up on earnings. That stock adding nearly 9% on the day. COTY, down 22% following their earnings announcement. Michael Kors down over 14.5%. As their earnings announcement disappointed the street. Remember, they are buying Versace and making a move towards the high end. And investors were similarly disappointed with another high-end consumer discretionary company the previous day, being Ralph Lauren. We touched on that yesterday. DXC down in conjunction with one of their analyst meetings, and KMX and Church & Dwight, CHD, both down on the day. No real news to point to. Leading to their declines. And as we look at our earnings update, Square, surprise to the upside, beat by 3 cents. It was, however, a very bearish stock. IAC Interactive Corp beat by 45 cents, but that stock traded lower as Match.com, tied to Interactive, did disappoint the street. Dish beat by 15 cents. Very bullish stock. Marathon, MRO, Marathon Oil beat by 4 cents, and Sempra Energy beat by 10 cents. Bullish stocks reporting before the open today. Cardinal Health is one to keep an eye on within the healthcare space. Also within the healthcare space, Perrigo. They do a lot of the store-branded names. So if you go into a CVS and buy the CVS product instead of the branded product, a lot of time that's Perrigo. After the close, neutrally rated Disney going to be closely watched, as will Activision Blizzard, ATVI, and Skyworks, SWKS, an important semiconductor company that also happens to be in the Apple supply chain. So that report will be closely watched as well. Investors will be paying attention to LLL as they are merging with Harris, and both of those stocks have come off pretty hard lately. So as I said, we've had a strong rally here, but we're now testing a key retracement level. So I kind of zoomed in on the chart of the S&P 500 here a little bit. We're looking at it over 3 months. And as you can see, the decline from the high on September 21st to the low last Monday is in place. We can now look at Fibonacci retracement levels of where the stock could likely start to meet some resistance. Now, it's interesting to note that the market yesterday, I meant the market, not the stock, the market opened yesterday right at the 50% retracement level and closed at the 61.8% retracement level, here around 28.13, 28.15, and that coincides with this intermediate term rally that we had following the initial leg of the sell-off. So this is a relatively important resistance level as far as I'm concerned. Futures are trading down this morning. Would not be surprised to see this level hold here. And what we want to do now is look for opportunities as the market pulls back to test support. We've identified support in the 2760 to 2780 level. That includes the 200-day moving average. Pullbacks to that level, should they hold, we'll be buying opportunities in some of our very bullish and bullish stocks, which have become oversold. Here we can zoom in a little bit and see the RSI a little closer. Did get above 50, but this still constitutes bearish ranges as far as I'm concerned. I want to see a move above 60. And here's a zoom in on that Chaikin money flow. Same chart we looked at earlier, just zoomed in a little bit because I really wanted you to see these retracement levels, and also note the 50-day moving average here at 28.33 is still declining. So just something to be aware of following this rally here. I know that you can get an impulse to kind of chase. Everything kind of feels good all of a sudden. Be disciplined. Use pullbacks to buy bullish and very bullish stocks. Breadth does continue to improve. Here's the percentage of stocks in the S&P 500, which are above their 200-day moving averages. And what's interesting to me here is we've gotten back above the 50 level. I like to see it above 60 because that's a sign that a solid majority of the names in the index can be defined as in long-term uptrends. However, what's interesting to me here, remember that intermediate term pop that I said might act as resistance? It also could be resistance for this metric. We're testing it right now. Again, we've had a nice rally. I'm not inclined to chase here. I want to pull back in the index that holds key support, that sets up opportunities in bullish and very bullish stocks in leading sectors and industry groups within the market. Use a pullback in the market to buy that Hill-Rom, which is in the healthcare sector, which we like so much, or look for oversold utilities names. Global markets, on the other hand, do remain weak. Here's the iShares MSCI ACWI ex-US Index Fund. And we can see just a steady downtrend below the 50-day moving average, below the 200-day moving average, both of which are declining. This trend is in place. It's been something that we've been keeping an eye on for a while. If you look at the major ETFs for the countries, we look at 33 of them. Only 4 of them, including the U.S., are currently above their respective 200-day moving averages. That is an improvement from last week when only 1 of them was above its 200-day moving average. But the rally that we've had here in the U.S. has extended globally, but it hasn't really changed the picture from a breadth and trend perspective outside of the United States. So it's just something to keep in mind, be aware of. So that's it for today. Get daily stock ideas for free. Head over to chaikinanalytics.com/TV to sign up for the email to follow along with this show. And if you like what you're hearing here, help us spread the word. I will talk to you tomorrow. Have a great day.